Hi traders, and welcome to the latest edition of the Keyzone Traders Trade of the Week. And this week we're going to look at what was a sort of mini swing trade on the DAX earlier on in the week. It was an absolute textbook setup which took a little bit of heat, more so than I would normally expect for that sort of setup, but we also used our zone report in the morning to give us confidence that even when it was in a little bit of a drawdown, that the trade was still valid and was still going to work. So let's go take a look at the charts and see how it played out. Hi traders, so let's go and take a look at the trade that we were looking at. It was on the 30th of November, so that was on Tuesday, and it was pre-market, so it was early in the day, and we'd had this impulsive sell-off, and we'd sort of consolidated, and then we'd had another impulsive move, and we had a key zone as per our report on Tuesday morning, that the reaction around a 14,990 to 15,020 zone will be key. Below there we saw we were expecting a move down to the key zone at 14,805 to 14,835, but if we could hold it as support, then we would push up to 15,240 to 260. So with that being in mind, this week we're going to show you the replay function to show you exactly what I was thinking about and looking at in real time as well. So we had this impulsive push down. Now obviously we had this as a key zone, and if we held below that, we was expecting a move down, and we actually saw a move through that zone and then a close back up with a bullish pin bar. Now a bullish pin bar in itself is not a signal necessary to get long, but when it's tied in with the various other factors, it can be quite powerful. Now there is a difference. There's a few nuances and things that we can spot when we see this impulsive move, and even from this impulsive move, I was actually looking for the reversal rather than a continuation pattern, and rather than a continuation of the move down. There's a few characteristics that we are going to teach in our Academy course, which will be launched in a couple of weeks' time, so we can spot that even ahead of time when we know the probability is likely that we're going to see a false break in comparison to a breakout trade. But the one thing that we do talk about all the time in these sort of sessions is the liquidity grab, and we had this swing low over here, and we had taken that swing low out over here and closed back above that swing point and back above our key support zone. So with that in mind, we then looked to take a long trade above that bar with a stop below that bar as well. And by doing that, what we did was, if the market fell away and broke down below, then we was getting acceptance below this level, and the trade would have been definitely wrong. Once we actually broke up, we could target this 15,260 area, that we recognized would be a good target. Reason we thought it would be a good target, obviously you can see it had been support here. The market was overall bearish, so that was a good area that you could potentially have seen a reaction from, so it was a good area to target. And also by that point that we would have seen that area, I would have expected these moving averages to roll over and that potentially act as dynamic resistance. Now with that in mind, these trades actually, once they break, especially they can actually move very quickly with very little heat and go straight to their target. So that was what I was sort of looking for, and I was sort of expecting, especially from it being a very key level around that 15,000 mark. However, what we actually ended up seeing, if we play it bar by bar, we got the break up in the next hour, and that bar is okay. We got another bar, and as you can see, we had pulled back, taken a little bit of heat. And as we got another push down with a nice tail. Now, when I saw this area hold, as per my report in the morning, if it held as support, I was expecting a move up to 15,240 to 260. So when we revisited, even though we was in a drawdown and we were taking some heat, all the time it held this area, I was comfortable and confident that the trade would then work. Now, we did then retest it again, put in another towel, and that again was another good reason for me to think that that zone was holding and that we could still see that push higher. Got another test and got another pin bar rejection. So again, I'm still sitting there thinking, okay, you know what? Yes, it's weak. We've got the impulsive move down. This is a little bit corrective. There's a potential for it to fall away. However, my key area, my key support area is still holding. We're getting some nice tails on the bottom, so there's nothing in the price action at the moment to suggest that I should be concerned that this trade is going to go wrong. And I just need to be patient and wait for the move up. So yes, it was taking a bit more time than I would have expected and I would have liked, but there was nothing in the price action at that time to suggest that the trade was wrong. If I'd got a close below this area and then a break, I could have potentially then looked to have tightened my stop and taken a smaller loss. However, at the moment, still, even though we're in a drawdown from their original entry, there's nothing wrong with the trade. Next candle, get a slight bullish candle, and that's starting to look better. And then the next candle was where it really confirmed that the move that I was expecting was going to happen. As you can see, it was a nice, really strong bullish candle up to the moving averages, which is where we actually took our half profits. We scaled out of our position here because that allowed us to pay for a stop below this zone, which if at this point, if that zone broke, then the trade would have been wrong. We were at what could have been dynamic resistance, so it was a good opportunity to take some profits off the table to make the trade risk-free, so that if it did act as dynamic resistance, we had a stop paid for in a nice area that would have invalidated the trade anyway. And then actually, just as we moved on, the trade went up and hit our target right at the top here, just before it fell away again. So as you can see, it did take a little while. It finally put it in, and we literally clipped our take profit by a couple of points, which was quite nice. You don't normally see that happen, but certainly if I just missed my target from seeing this candle, I'd be looking at closing it out from there, or even stop to entry or something on the remaining balance, just because that then shows the bit of weakness. It was a continuation pattern on that time frame. So again, a few more advanced concepts, but I just wanted to show you what my thought process was as I went through the trade as well. So hopefully that you can gain some advantage from that as well. So I hope you found this useful, guys, and I'll speak to you next week.